Testing 1 2. Testing 1 2. All right, cool. All right, let's see. Let me turn that on. All right, cool. I just sent out an alert telling everybody I was live. So I'm gonna give people some time to join, guys. Let me see. Let me get this set up really quick. There. Cool. I can see the chat. All right. All right, for everybody joining in on Discord and on YouTube, thanks for stopping in. I'm going to give everybody else a few minutes to join here. We'll start in about 2 or 3 minutes. Two or 3 minutes here, guys. There we go. I got the chat up finally. Cool. What's up, Alex C? How's it going, man? Alex is going good. Thanks for asking. All right, let me see how many people we got in here. Man, we got about 8 on YouTube. We have a few in Discord. So what's up, guys? So a lot of you guys have had questions about my trading strategy, what a credit spread is, kind of how I trade them, how it really works, the benefits of it, the cons of it, stuff of that nature. So I want to give you guys a quick little live stream this evening just to kind of clear some stuff up and hopefully help you guys better understand my style of trading and just overall grasp just a different side of options, right? So first, I'm going to kind of go over what a credit spread is, or what a credit option is in general. Then I'm going to go over my strategy, and then I'm going to go over why I trade this way. So let's see. If you guys have any questions throughout the whole, I don't want to call it a presentation, but I guess it's kind of a presentation. Feel free to ask them in the YouTube comment section, or if you're in Discord, feel free to unmute really quickly and you can ask the question. Let's see. I do ask that while if you're not asking a question, that you remain muted. That way, there's no disturbances. But without further ado, I guess we'll kind of get into it. Basically, if you're here, you probably know what an option is. But we'll kind of start from the basics, right? So an option is, whenever you're buying an option, you're buying the right to purchase 100 shares of that security at a strike price, right? So, but you're paying a premium to do that, right? That's your option premium. So for example, if we went to Apple really quickly, this is just simple basics, right? Apple's trading at 158. Let's say we buy a 160 call. If Apple expires over 160, we have the option to buy 100 shares at 160. But to do that, you pay that premium, right? That's why it's an option. You have to pay a premium to have that option. So basically, that's just a quick synopsis of what the option is. Now, that's if you're buying an option. Every side of everything has a buyer and a seller. So if you're selling options like I'm doing, that gives you a net credit, right? If you're paying something, you have a debit. So, and whenever you're buying options, you cannot lose more than you put in. If I put $100 into an Apple 160 call, the maximum amount I can lose is $160. However, as time goes on, that option's gonna be worth less and less money because of your theta decay, right? So if Apple doesn't move up in a timely manner or a timely fashion, I'm going to lose money even if the stock still goes up slowly. And that's kind of why I like credit spreads, right? So basically, a credit spread is the exact opposite of buying an option. You're selling the option. You're selling the right. You're selling the option to buy that security, right? So essentially, we'll go over the quick fundamentals of what of selling options are, just the risk involved, and then we'll kind of go over why I like to do that. So basically, if I'm selling an Apple 160 call, right, that means I want the stock to expire under 160. So it's actually bearish. Selling a call is bearish. Selling a put is bullish. So if I sell an Apple 160 call, I want the stock to expire. Let me make a new chart for you guys really quickly. That way we can just write on it without messing my other stuff up. So if I buy an Apple 160 call, or sorry, if I sell an Apple 160 call, it sounds really complicated, but I promise you it's not. Where's the ray? Okay. Horizontal ray. If I sell an Apple 160 call, I want the option to expire whenever Apple's under this line, right? But if it's over this line, I have to sell 100 of my Apple shares at 160. So it's kind of an opportunity cost, right? Because if you bought your shares lower than 160, then you're fine. You're still making a profit and you're doing other things that I'll go over in a second. But if not, you're at a loss. So let's see. It's kind of complex, but once you get it, you get it, So I kind of talked about whenever you buy options, right? You're paying a debit, right? You're paying that premium. Whenever you sell options, you're the one that collects that premium. So let's say it's $100 to buy this call. If you're selling the call, you're collecting that $100 no matter what happens. If Apple goes to 0, you're collecting $100. If Apple goes to 180, you're collecting $100. If Apple stays around this level, you're collecting $100. So if you're selling the option, you're always going to be getting that premium, right? It's called selling premiums. And if, kind of like I said, whenever you're buying an option, theta, the theta decay, your time decay. So whenever, if you guys don't know what theta is, as time goes on, that's your theta, and you lose money if you're buying an option because your theta kind of eats the option. If you're selling options, that helps you because the value of the option goes down, so you make money. You know, it's like selling short a stock. It's really not that complicated. It just sounds pretty complicated. So I hope that makes a little bit of sense. Do you guys have any questions so far? I know I'm kind of going fast, but I kind of want to get into the why. But do you guys kind of understand the basis of it, the fundamentals of it? Just a little bit. You know, I'm not going to get too deep into it, but essentially a spread. So most brokers will make you have, if you're selling calls, you'll have to have 100 shares of that security or your broker won't let you. Unless your broker allows, Mark, that's exactly right. So if you are selling calls, they have to be covered by 100 shares of the security. Your broker will make you do that, most brokers. If you're selling a cash secured put, like for example, NEO, right? I opened a NEO short, right? So I sold a NEO 8 put. So I had to have at least $800 of collateral against that, because if NEO expired below $8, then I would have to buy 100 shares at $8. So I'd be losing money, but I'm getting that premium. 1 second, let's see. So I hope that kind of helps you understand the reason of it. And I trade spreads a lot of the time because that premium can be huge, right? It's like for NVIDIA, or let's see, I entered the MasterCard options, right? I sold 325 puts. So 320 all the way down here. It's like, in my mind, the likelihood of MasterCard actually going down here was so low. But if I did this with just a naked selling a put, you'd have to have $32,500 to buy one security or buy one option. And that's just an insane amount of money just for one, you know, because you're only collecting like, what is it, $60 worth of premium? So what I did is I bought this one here, 325, and sold the 310 put. Or sorry, I sold this one and bought a put further out. And what that does is it cancels out your collateral and it makes your collateral your spread, right? So the spread between 325 and 310 right here is $15, right? So instead of having to put up $32,500 of potential collateral that your broker will make you put down, you have to put down $1,500. That's a huge difference, and the gain is roughly the same. You might lose a little bit of money on that debit side, but it's roughly the same. So that's the spread part of it. So let's see. Paul asks, how much percent can you make by selling 1 week Apple puts? So it just depends on what percentage wise, the max gain on a credit spread is 100%, or a credit option period is 100%. You cannot gain more than 100%. However, you can lose more than 100% technically, depending on your strategy, right? So, which I'll get into more in a minute. But the most percent you can gain is 100%. Let's see, any other questions so far? Salik says, I want 200%. You can't get 200% because all you can do is double your investment because you're selling an option, right? It's like selling short a stock, right? If I sell short SPY at 396, if I sell short 1 share of SPY at 396, the most I can make is 396. It's the same thing with options. Oh, what's up, Moon? All right. Any other questions, real quick, guys? If you're in Discord, feel free to unmute real quick. More than happy to answer any questions. If you're in YouTube, same thing. Feel free to just comment really quick. Unless you guys are good. SD said, so is this like a ghetto spread, which you just described when referring to a spread? I'm actually not familiar with the term of a ghetto spread. Can you quickly just give me a quick synopsis of what a ghetto spread is? Or I'll look it up, actually. Let me just get a quick chart of a ghetto spread. So a ghetto spread is to buy an option, and when it goes up in price, sell another option to recoup your original purchase price while being left with the free debit spread. Okay, so a ghetto spread is a little bit different. Kind of like Paul said, it's a way to avoid PDT. Basically, if you do a ghetto spread, you're just locking in a specific profit, netting a debit, right? So ghetto spreads are always going to give you a debit, where here it's a credit. It's a little bit different. You're describing a debit spread. So a debit spread is if I buy a closer call and I sell a further out call. What we're doing is we're selling the closer call and buying the further out call. It's a little bit opposite. Yeah, okay, cool. You got it. Awesome. Cool. Let's see. Any other questions while we're on this topic really quick?
I have a question.
Yeah, what's up, man? Who's talking?
Okay,
so I can see.
It's Fusion.
Okay, gotcha. What's up?
So, in FRC, I think it was FRC, right? The bank. Which one was it? FCR or FRC?
FRC, yeah.
Yeah. So, so say if you did buy the right to sell a contract, right? An option.
Sure.
Like a call or whatever.
Yeah.
What is the differences between selling one that's closer to in the money than going down to the bottom to where you were?
Sure. So FRC is kind of interesting right now, especially for the credit side of things, because whenever there's higher volatility, those premiums are worth more. And we see that on stuff like SPY, on FOM, on like Fed meeting days. Like if you're buying options, it's going to cost a lot more to buy the same strike on a news day because the volatility is higher. So FRC right now is kind of in the same boat because banks are collapsing. Like FRC took a huge hit. The implied volatility of the option is through the roof. Right. I think everybody can kind of grasp that pretty easy. But as far as buying closer to the money to out of the money, it's a risk thing, right? So the further out of the money that you sell an option, the safer you are, because the likelihood of it getting to that number is so unlikely. If you're on Robinhood, actually, it'll show you the percentage likelihood to be profitable. Sorry. Also, if you're closer to the money, if you want to have more risk, you're going to collect more of a premium, right? So that's the trade-off. The trade-off is if you're further out of the money, it's a little bit safer, but you're going to make less money. But if you're closer to the money, it's riskier, but you'll collect more of that premium. Does that make sense?
Yeah, I got something to add to it.
Sure.
Okay, so let's say that we bought it. Well, let's say it was going to expire Friday. You know what I'm saying? And so you sold the option, let's say Wednesday. You know, you got 2 days there with that high premium. Am I still in the right lane here?
Technically, yes. A lot of people do that. It's all about strategy in a way, right? So some people will sell really close to the money options that are expiring really soon, just because you're like, hey, it's probably going to expire worthless, so why don't I just go ahead and sell it, make some quick money? You know, not I mean, that's a great strategy for some people, especially if you don't want your collateral, if you don't want your buying power locked up for a long time. By all means, like, go for it. It's a quick passive income if you're safe with it, right? Um, Especially if that's that pumped premium. Like, I mean, go for it. Especially it's on like a Friday and you're like, hey, this is not gonna pump $3. Like, sell that call and collect that premium. Now, my strategy in particular, we'll go ahead and kind of pivot to that. My strategy is to give the option about 1 to 2 weeks until expiration and collect a higher premium because the time's further out, right? Your thetas are still low, and it's the further out you go, the higher your premium anyway. So I like to sell options that are 1 to 2 weeks out, sometimes 3, not usually, but I do a lot further out of the money, and that way I feel safer because the option's going to move slower, but the closer it gets to expiration, the faster I gain that premium. And that's how I've been able to have a good amount of 100% gainers lately, is because I go far enough out of the money to where it's safe and you're still collecting a decent amount of premium. Does that make sense?
Yeah, yeah, absolutely. So what you're doing is, I mean, it's the same concept for options itself. If you buy an option further out, what if the price was to collapse? Like, say you were selling a call and the price was to collapse and their option price was to collapse, you would buy that option back.
Yeah, so the way taking profits on it works, sorry, I just had a smoothie. So the way option taking profits on the credits work is, let's say I sold a call for $100, and on the Friday of its expiration, it's worth $5 now. You can buy it back for $5, and then your profit is $95. Or if it's out of the money, you can just let it expire worthless, and you get 100% profits. So if you let it expire,
but you would probably want to buy it back though, because you wouldn't want them to roll it over, right?
it really doesn't matter. What do you mean roll it over?
Yeah, doesn't the buyer have the ability to roll an option over and keep, like, I'm trying to think how that is, how they roll it over, right?
Yeah, I mean, anybody can roll a contract. Whenever you roll a contract, you're just closing one and opening one further out. That's all you're doing.
Is that underneath is that going to still be underneath your?
No, I mean, just because I'm selling to one, you're not specifically selling to one person, right? Like, it's the same thing as buying and selling an option. It's not like somebody's rolling your option. You know, they're just rolling an option, period. How do I explain it? I mean, it's just like, it's a stock market, you know, it's a market. So someone might say, hey, let's say I'm a buyer, right? And I have a call expiring this Friday that I want to roll 2 weeks out. I can go in there and do that. And let's say you're the seller. I might not specifically like sell your option, you know, you just sold short the option, and whether it expires no one can roll your option for you. Basically, you're not being lent an option short or anything. You're literally selling the option because you're selling your own right. You're selling your cash that's securing your put. You're selling the stock that's securing your call. Like, it's not like selling a stock where you're stock lending. You know, you're actually short the option. You're not short the. Okay, if I short Apple, right, I'm shorting shares, borrowed shares, so I can buy it back later. If you're shorting an option, you're shorting the literal option, not the security of an option, but the option to do these things. So you are basically saying, hey, if this expires over this, whatever, if this call expires in the money, I'm selling my option. Like, I have the obligation now to sell you 100 shares of this stock at this price. Does that make sense? Kind of. It's kind of complex, but once it clicks, it's so fun. I'm telling you.
Yeah, no. Yeah, it makes sense. I was confused on the rollover part on how that works when you're trying to sell an option.
Yeah, and you can still roll your options at yourself too. So I actually tried to do this recently. I couldn't get filled on it, just on my personal trade. I'm short some shares somewhere. Actually, it's another Neo position. So let's just use for example. So my Neo put expiring on this Friday is a Neo 8 put that I entered like way down here. So it's going to expire at 100%. But instead of just like making the trade, I want to roll it to like 2 more weeks out. And what that does it essentially buys it at the current price. So let me check really quickly on my phone and see what Neo's trading at. Let me see. So we sold short our Neo put at 0.35 and now it's trading at 0.04. So as far as rolling goes, you would pay a $4 debit per contract to buy this contract back. And then you're collecting the credit for the next contract that you roll out. That's where it gets kind of, complex because it's kind of a lot going on. But the principle is the same, where if you're rolling one that you buy, you're selling it to take your profits, and then you're buying another one. This one, you're buying it to take your profits and selling another one. That kind of makes sense? Kind of answer your question?
Yeah. I was trying to find the mute button.
You're cool, man. All right, cool. Let's see. I kind of went off on a limb there, guys. You guys are talking up in the YouTube chat. Let me see. Yeah, you guys are spot on. Nelson and Paul, you guys are spot on. Awesome. Cool. Let's see. Any other questions really quick? Let's talk about IV pumping, right? So whenever news comes out about a security and the price is all over the place, the implied volatility of that security will be crazy in the options, right? Like you look at Bed Bath & Beyond, they have like some May options expiring that has like 250% volatility. And what that's going to do is going to jack up the price of the option so you can collect more premium. You can kind of capitalize off that. But we kind of talked about what my strategy is, how I do things. Let's talk about why I do things, because whenever I hear people's strategy, it's kind of hard to see why they do things because you don't know their situation. So I kind of give you guys my situation and just kind of some insight into my life and why this is my strategy. So personally, I don't care for 200-300% gains every now and then. I'm fine with a consistent 60 to 100% gains, especially whenever it's kind of stress-free. Because I work a job, I'm in college, I travel all the time for my business, and I can't sit down and trade. I can't sit down and day trade like I used to be able to. And whenever I swing trade options, I either, lock in a pretty small gain or whatever, or it's a hedge, or I don't really get great wins whenever I swing trade regular options. So I started swing trading credit spreads. And what that does is it allows me to get on my phone 2-3 times a day just to open or close some positions that are probably in profit. Because, like I said, I sell stuff so far out of the money that I'm just, it's almost like passive income at this point for me, because I'm consistently green, and it's the best feeling whenever you're consistently green and only getting on your phone a few times a day to trade. Because I just don't have the time to get on and trade or day trade, or, like I said, I don't like swing trading, long options now. I swing trade short options. So that's why I do things, just because it's convenient. I started doing a lot of heavier swing trading of stocks, and I was like, this is not the profit that I want to make. So I started swing trading credit spreads. and shorting options. And that's where I found most of my success, just because I was simply busy. I don't have to monitor it that much. The risk is relatively lower than regular options. And like I said, it's passive. So if that sounds like you, if that sounds like, if you're somebody that wants to kind of, if you work a 9 to 5, right? It's hard to trade during the day, especially at work. If you're somebody that's like that, and you are not seeing success, you're not seeing profitability, day trading options or swing trading options, I would say try to short sell options. It doesn't hurt to try, especially with good risk management. So does anybody have any questions about the why I do things? Because now I'm going to tell you how you can get approved and how you can get into it. So Love the Pyro said passive as far as limited input, or passive as far as no effort at all. So kind of both, right? For example, let's go back to this MasterCard trade, because this is a perfect example of a credit trade. If you look, I sold, let me go see when I actually alerted this sell. I alerted it Friday. I know I did. I know for a fact. So Friday would be right here. So Friday, I basically said, hey, by next Friday, I want MasterCard to expire above 325. And then I'll reach 100% gains, right? And today it's 80% already, but let's just say that. So that means I want MasterCard to expire above this line, which is like a 10% move. And so I looked at that and I was like, that's just free money. Like, I'm collecting money just by doing this, I'm putting my money to work. I'm a firm believer in your money should work for you. You should not have to work for your money. And that's the whole passive thing. So you said passive as far as limited income, or passive as far as no effort at all. I would say this is like little to no effort, just of how, it's just, you do it and you watch it. If it gets close to 325, you exit, whatever. And as far as no effort at all, I don't feel like this is much effort in my opinion. It's all about finding these situations. That's the hard part. Does that answer your question, man? Let me drink some of this smoothie. I'm assuming that answered your question. Awesome. Anybody in Discord have any questions? Like I said, feel free to, if you have any questions about the why I do things or anything I've gone over thus far, just let me know. Anybody? You guys good? Cool. So now I'm going to go over how you get approved and the type of account you have to get approved, right? So if you trade on a cash account, it is, you cannot trade credit options. You can't sell options if you're on a cash account. So this is a margin only feature. With that being said, I am a firm believer in not having to work around PDT, pattern day trading, because I know a lot of you have accounts under 25,000. You just simply don't have the means to satisfy the PDT rules. So my trades specifically are catered to people that want to swing it. They want to get the max gains, and that's that. I rarely day trade, maybe once every other week. And I won't alert those trades. Those are just my personal, like, little fun trades or whatever. But what you need to do is you need to get on a margin account. You need to be approved for level 3 options. Level 3 options. So level 1 lets you sell covered calls, which is pretty standard. No risk to anybody, like to the broker or you. Level 2 lets you buy naked calls and puts. And then level 3 lets you sell calls and puts and credit spreads. So, like I said, you need to have a margin account and be approved for level 3 options. I'm pretty sure you can do this on Webull, TD Ameritrade, I personally use Robinhood just because I like the interface and I like their features as far as their like cash. You earn interest on your cash, and I have my retirement account in there, and I just like the interface, so that's why I use Robinhood. But basically, that's it. That's how you would get approved for it. That's what platform you would use for it. Any questions, guys? Feel free to ask them. Let's see, Moon's in here, Marky, SD, X Fusion, I guess. Any of you guys on YouTube, like I said, feel free to ask them in the comments section real quick. Do you guys understand? I feel like I kind of went fast and it's kind of complex, but do you guys understand it? That's my real question. Because if you're just completely lost, then by all means, I'd love to re-explain some stuff. Because you know, I'm a trader, but I also love educating everybody else. Because people invested into me and helped me learn information like this, and so I feel like I'm obligated to help you guys out too. Because I want all of us to be successful, you know. So. Cool. So I'm gonna go over a wheel strategy really quick. It's kind of interesting. So one sec. So like, let's go to a stock like again NIO. It's just an easy example. So we have an 8 put. We sold an 8 put, $8 put. So if the stock expires under $8 on that expiration date, we have to buy 100 shares at $8. So our max loss is $800 minus the premium we collected. So if it expires under $8, we would have 100 shares of NIO. But we collected however much premium that we sold it for, right? So you're not a complete loss because you got that premium and now you have 100 shares of the stock. So what you do then is you sell a call. And you keep selling calls and selling puts, selling calls, selling puts, until you eventually sell your shares of NIO. You know, your covered call. It's called a covered call. So if you own 100 shares of NIO, and you have a $10 strike, and NIO expires over $10, you have to sell 100 shares at $10. And what that would do is it would net you a $200 profit plus your premium. And it's a wheel, you know, so you aim to collect the premium from the $8 that you sold. That's your ultimate goal. Like, hey, this is trading at, you know, this is trading at $9. I'm going to sell an $8 call. You know, I want to make that little premium. And if it expires above $8, cool. You collected premium. If it expires below $8, you know, and you get assigned, that means you have to buy 100 shares of that security. But then you just keep rolling that around. You keep selling calls, selling puts, selling calls, selling puts. And that's the real passive income strategy, is a wheel strategy. So like I'm personally doing that with Bed Bath & Beyond right now. I'm short a pretty good position in $1 puts that are so pumped up with implied volatility that my break-even price is like 65 cents. So I have like 20 cents to go before my break-even hits. And even at that, I'm going to get assigned probably right now, but I'm going to then sell calls right afterwards and keep rolling it. And I'm really excited whenever that expires and I get assigned, because just extra money in your pocket, you know? So
you're wheeling Bed Bath & Beyond. You're wheeling it.
I am, yes.
And are you not concerned about the sudden crazy spikes that happen in that stock?
Not really. So let's just go real quick. So I'm wheeling it because I have a May 19th. I sold May 19th $1 puts, and my break even is at 65 cents. Because of how volatile the stock is, the premiums were pumped a huge amount. So
you sold puts.
Sorry?
You sold cash secured puts.
Correct.
Okay.
Yeah. So I sold the cash secured puts, and my break even is 65 cents because the premium was pumped up so much. So if I get assigned, what I'll do is I'll hold the position because I sold them for 40 cents a piece. So I'm selling them for about 40% of the current stock's value. So in my opinion, I'm getting a discount really on the stock. I have to buy it at $1.
But you have to understand this stock can easily go to zero too.
Correct.
It's a garbage can.
Correct. And that's all part of the risk of it, you know? I mean, and that's just a risk that I'm personally willing to take because I know my max loss is not detrimental to my portfolio.
Got it.
Yeah, so it can go to zero, absolutely. But I'm banking on it not going to zero, by May. And if it does, whatever. I collected a lot of premium and I lost some money. But it's not like I lost, if I shorted Apple or something, It's not quite as detrimental just because I'd be losing 60%.
And you're right. As long as Bed Bath and Beyond is still as a business, it's not going to go to zero. As long as they don't file for bankruptcy or the new CFO doesn't jump off the building. Last year somebody jumped off the CFO of Bed Bath and Beyond jumped off his balcony in New York. You know that, right?
Right. Yeah.
So as long as he doesn't jump off and doesn't cause you to jump off, then I think you're fine.
Yeah, I mean, it's such a meme stock that no matter what, the implied volatility is always going to be so high. So those premiums are going to be so pumped up. So in my mind, if I can get assigned and own, let's say 1,000 shares, just to be easy numbers. If I can be assigned 1,000 shares and collect $400 worth of premium, right? I'm at a $600 cost for those 1,000 shares of the stock.
All right.
So if I can wheel that out 2-3 more times, I just have free equity in the company at that point.
Right. No, I think what you did is very smart. The only problem is you've already taken the trade, so I don't know how we can enter that trade. I think it's too late to enter it, right? Because it already is. Or do you think we can still enter it? Are you recommending we sell puts on it tomorrow?
No, I'm not saying that. I'm just saying I was trying to explain a wheel, and that's just one that I've personally had open. It's really hard to alert a wheel just because people don't quite understand them, and that's why I'm trying to have these informative live streams. Because I love to start alerting those kind of things because they can be really lucrative if you stick with it. But
another stock that I would recommend that has good risk to reward is Snaps. If you look at the stock market, everything was garbage except Snap. Snap was the only stock that actually rallied and actually held its gains, whereas big stocks like Meta, Nvidia, Tesla all were down the toilet. So I think Snap also has. If Snap can break the 12 resistance, I think Snap can go back to 15 because if they pass a resolution banning TikTok, which I hope they do, then Snap will be the main beneficiary. You know that, right?
Sure. Snap and Meta because of Reels and Instagram. But
yeah,
I think Snap. I think I've looked at Snap. I'm not sure what their premiums are. I just know Bed Bath & Beyond is such a bargain because it's trading at under $1, and if you can collect 40 cents per share, that's 40% of the cost. It's just incredible.
That's pretty good. I think it's because the market makers are scared of what can happen to Bed Bath & Beyond. So it's also the implied volatility. It's also the risk that it can go to like 20 cents a share. So that's why the puts are so expensive. So I understand that. I'll tell you about the Snap puts. The Snap puts are not as lucrative as your Bed Bath & Beyond. If they are lucrative, the problem is the stock is $12. It's expensive stock compared to $1 stock. So you're saying for selling the dollar puts that expire in May, they're worth 40 cents right now.
Correct.
That's pretty lucrative. So if somebody wants to sell, say, 10 puts tomorrow, their risk is $400. $600.
Correct. Exactly.
They're risking $600 to make $400. So that's a pretty good risk reward. They're not going to go bankrupt selling 10 puts. And then if they do get assigned, they just sell calls and they're good, like you're saying.
Right, and that's what I plan on doing. I even plan on doing something a little bit different. So a lot of people that do a wheel strategy is they'll sell puts, and if they get assigned, they'll sell calls at the same strike price. So their profit, if they end up having to sell their shares, their profit is the premium they collected, right?
Yeah, so I think what you're trying to educate us is that we can sell for example 10 BBY puts tomorrow, $1 strike for May expiry, May end of month expiry. If we get assigned by the end of the May, we can then go ahead and just keep selling calls that are 2 months out for $1, and then we'll collect the premium. So we've already collected $400 on the puts. So on a $600 investment, we can sell the calls, which are probably going to be $400. So then our net risk is only $200, which is excellent because it's not going to go to zero. The stores are still there. We are headed toward the recession, but people still need to buy stuff from BBY. So and the only sad part is if BBY rallies up to like $10 or $5, then you're going to be upset. You're like, oh, why did I sell those calls? So I guess it's what you're doing is very safe actually. So I think it's a really good strategy.
Right, and if it rallies, then by all means, it's whatever. It's just you still made your big profit, and that's all that matters. Whenever you go into the wheel strategy, you have to have the mentality of, hey, this is my maximum gain, this is my maximum loss.
So let me ask you a question. Why would you say so? You're gonna sell the puts now, or you already sold them, right?
Yeah, I've had this position since February.
Okay, so your puts are still active. You have 2 months for the expiry, and then after the expiry, you're saying then you might sell calls if you're still in the position. If you don't get assigned, then you just pocketed the profits.
Right.
And you sold about 100 puts, I'm guessing.
A couple hundred, yes. I sold about 250.
Okay, so you're looking at a risk of 15K, 15K, not
around that, yes.
Okay, so that's good. So if you sell 250 puts, then you're collecting about 25K. No, you're collecting about 15K by May, which is excellent.
Well, yeah, about 12, but yeah, right.
Okay, that's excellent. So I think this is a good strategy. You can make 12K, 10K by 2 months doing nothing and just sitting on it. That's pretty good.
Right, and like I said, the wheel strategy is in my opinion, it's the most passive income you can have. However, you really want to do a wheel strategy on a stock that you're okay holding long term. Bed Bath & Beyond's kind of a gamble, like we've kind of discussed. Now, if you're doing it on a more reputable company that you're okay holding long term, that'll be a lot more conservative and a lot safer. Because if you do get assigned, you'll be like, okay, well, I have 100 shares of a company that I believe in and I'm okay with. Like PCT, for example, Pure Cycle Technologies is a medical company that I firmly believe in, and I own a few thousand shares of it. But as passive income, I sold $8 calls and $10 calls expiring in May and August. So I'm collecting premium. And if it reaches that level, cool, I'll make profit because I bought it under $7. And if it doesn't reach that level, cool, I collect premium. And then if they end up getting sold, I'll sell puts. It's just, but I'm okay owning this stock.
Right. No, I understand that. So that stock that you recommend that's safer, what's it called? PCE?
PCT, it's just one that I personally believe in. I'm not here to make any investment advice, but these are just my strategies,
Okay, so PCT, it's at $6 right now, $6.60. So we sell the May puts for $6, which is 85 cents for that, and that's pretty good. So I think this stock, the lowest it's gone is 623. It's actually gone to 444.
Right, it's gone to 440. So it just had some news come out.
Oh, okay. So it rallied today. So tomorrow it should sell off. So I think selling the $6 puts for this is safe because I think they got support at $6. I think it's not going to go back down to $4.
Sure, I don't either.
Yeah. So I think you're recommending for PCT the safer play. We sell the $6. We sell the 6 strike puts, and we can hedge it by buying the $4 puts. So then we're protected if it goes below $4.
Right, and that's just your spread, correct. So that's not selling a naked option, that'd be a spread.
Yeah, or sell the $6 puts for 85 and buy the $5 puts for 45. So you're making 40% on your net credit, which is pretty good, 40 cents per contract. You sell like 20 of those, you're making like $800.
Correct.
And but it's very safe because you're making $800, but your max risk is probably like maybe 200, 300 that way. I'm just guessing. So
It's and like I said, mine's a little bit different because I already own the shares.
yeah.
So I'm just selling the calls because I already own the shares. But yeah, I mean, for example, like you said, if you want to sell the $6 put on PCT expiring in May, by all means, go for it. Like I said, I personally believe in the company. I'm not telling you to buy it or to sell it, but if you are wanting to like try to get into the wheel strategy, I mean, I think it'd be a good entry point to at least try it. For those of you that haven't tried it.
Yeah. The problem is it just rallied today, so we're maybe looking for a better price. Like I think it was 439 like just 2 weeks ago, which was probably the best time to sell the puts. But now it seems like it rallied to 7, it crashed to 5.5, now it's 6.5. So maybe if it goes back down to 5.5 is a good entry point to sell puts, because right now you're selling puts on the highs, and it just got downgraded by Oppenheimer from profit target from 10 to $10 from 14, lowers long-term estimates, keeps outperform rating. So it's funny, they're saying it's going to keep outperforming, but they lowered the target from 14 to 10. That's pretty shady.
Yeah, it's odd, but the whole thing is their earnings just came out. Their earnings were like exceptional, considering they're still a startup that hasn't even started production. So this company is a recycling company that essentially is going to start up production, but they have not yet, and they have great prospects. But they're supposed to start production at the end of April. And that's what the news they came out of right here during their earnings call before their actual earnings right here. That's where they gapped up. They ended up like 40% this day.
So yeah, I think a startup position, selling the $6 puts, maybe like 5 puts, and then if it dips, you sell more puts.
Sure.
Is probably the best idea. And I don't think you need to do spreads on this, because I read the news, they are doing good work. They didn't get downgraded. They just got $10 is still like $4 more to go. So I think you're right. This is probably a good play, where you can sell the, you could do two things. You could sell the $6 puts, and then you could sell the $9 calls, and you could hedge the calls maybe by buying the $11 calls as a vertical debit, a vertical credit. So that way you're doing an iron condor.
Right.
So you're selling the $9 calls, you're buying the $11 calls as your protection in case it flies up, so you don't get bankrupt. And then you're selling the $6 puts, and you're buying the $4 puts as your max. Actually, you don't need to buy the $4 puts.
Yeah, you wouldn't have to. You have the cash to secure it.
Yeah, you have the cash to secure it, and it also, it doesn't really. It never fell below 490, 480. So there's no point of buying the $4 puts, because they would be worthless anyway. They would expire worthless. So I think this is a good trade where you sell the $6 puts, and then you sell the $10 calls or $9. I don't think maybe selling calls is a good idea, because it might go higher.
Right, it's a very volatile stock. So what I did personally is I started selling some puts up here and some calls up here. So I'm okay if it goes down. I sold some $4 puts expiring in August, so they're kind of really far out. But the implied volatility was so pumped up right here that I was like, hey, I'm gonna go ahead and just sell some puts farther out, just because the IV is pumped right now, because it was after earnings and all this crazy news, and it was up so much. So I'd sell some really far out of the money puts expiring in August, and then I sold some $8 and $10 calls while it was pumped up. So I'm kind of in a condor. So yeah, basically I'm in an iron condor, but I'm positive on both ends, because I'm collecting that
theta.
No,
you're doing great. The only problem is you gotta wait a long ass time to collect the gains. I mean, you could if the market, if it becomes less volatile, you can probably take some profits off the table. But like I understand April, May makes, like if you sell something that far dated, you have to wait a long ass time to collect the dividends.
Right, and that's why I'm not. That's why I'm not alerting this. The plays that I alert are 1 2 week swings. This is what I'm just saying. This is what I personally do. If you want to do this on your own time, just passively doing it.
Right. So can I ask you a question? What are you planning on day trading or swinging tomorrow?
It really just depends what the market gives me. You know, I try to sell calls when the market's overextended. I try to sell puts whenever it's too far down. So I didn't really get to look at the market much today. If we gap up around to the previous highs right here at around 403, I'll sell some calls, maybe some SPY 410 calls and buy some 416s, 415s for a credit
For what
spread.
date? For what date? For what date?
Probably April 6th. What I'll be looking at.
Okay, so you're gonna sell the 410 calls for April 6th, and you're gonna buy the 416 calls as your protection in case Spider blows up.
Correct.
Interesting.
That's what my strategy would be if it gaps up.
You know what you can also do? Have you ever tried like the daily 0DT SPX butterflies? So I think a lot of people, including myself, have been destroyed because we just buy calls, and sometimes when the market doesn't move in a direction, we lose a lot of money through the theta expiration. But if you do butterflies, it's a lot cheaper. So if you buy like say the 395 SPX calls, but then you sell the 399, 398 XPS calls expiring today, you know, you would have made money because your 397 or 398 calls that you sold were expired worthless, so you collected the money there. But if Spider was above 394, 395, have you tried the butterfly approach?
I don't like trading DTEs because I don't think you were in here earlier. I'm not sure, but I kind of described why I do this, and it's because I work a part-time job at a wealth management firm. I have my own business that I travel a lot for, and I am in college as well. So I have a lot going on. That's why I swing these things out. That's why I don't actively day trade these type of positions.
Okay.
Right. So in my eyes, it's a really beneficial way to trade if you want to swing positions and if you don't have the time to sit down and day trade.
No, that's great. The only problem with swings is that, you know, the market is so crazy. You never know where it goes, you know.
Right, which is why on stuff like MasterCard, like I said, I took a position that expires this Friday that's about 10% out of the money, and we still collected like $40 a share, or $40 a contract.
Oh, you sold calls or you sold puts on MasterCard?
I sold 325 puts.
Oh, you sold 325 puts.
Right,
Oh, wow,
and we bought 310 puts, so we had a $15 spread.
Okay, and say that didn't work in your favor. Say MasterCard crashes. How much would you lose on that trade?
I think max loss is 1,500 minus collateral, so 1460, I think. But I mean, that's the whole trade-off. You know, the odds of something like MasterCard crashing, yes, they're always there, but the odds of it are just very unlikely of it crashing 10% in a week. Especially something like MasterCard, where we just had a banking crisis and it didn't even move that much. It's a credit company.
Oh, okay. So your put spread expiring this week.
Correct. Yeah, expires Friday. I sold it I think I sold it on last Friday. So it'd be a 1 week swing.
Okay, and how much profit are you looking in that trade?
Right now, I'm already up 80% in that trade.
Oh wow, that's good. So that means MasterCard rallied from Friday's low.
Well, not even that. It's just the theta over the weekend. You know, it eats at those contracts.
Okay, so I think what I'm understanding from you is sell the contracts the Friday for the next Friday, and then you make money on the theta decay over the weekend.
Correct, because actually today we gapped up a little bit on MasterCard, but it finished today up only less than 1%, and I'm already up 81.63% on the position.
Wow.
Yeah, so I mean, it's like I said, it's fairly passive, it's fairly effortless just doing it.
Right. And you sold the 325 puts and you bought the 310 puts, but you probably lost a lot of money on 310 puts insurance because they probably went to almost zero.
Correct, but I think I bought them when they were worth 25 cents a piece. Now they're worth 4 cents a piece. And I sold the 325 at $74 a piece, and now they're worth 13 cents a piece. So my net profit so far is my credit was $49 per contract, and now it's worth $9 per contract. So Right. So I mean, over the weekend,
$40.
that's a great swing.
Oh wow, that's pretty good. Did you announce that trade?
Yeah, I did. It's in my effortless alerts channel on Discord.
Okay. Effortless Discord channel, effortless alerts, right?
Yep, that's it.
Is it Theta? Is it Theta spreads or effortless alerts?
The one below theta spreads. That's not me. I'm effortless alerts.
Effortless alerts. Okay.
So if you see
Got it.
on 323 at 2 o'clock, I said I'm opening MA 325 310 put credit spread at 0.49.
Wow.
Yep.
Wonderful. And how much is Mastercard right now? The 350 or 330 or something?
It's at 355.
Oh my God. Oh wow.
So like the odds of it
Okay.
dropping 10% is pretty low in my opinion.
No, I think that's great. I think you're a smart ass trader. That's really good.
Well, thank you. I appreciate it. And like I said, my trading log, if you look in the same channel, it's, I haven't lost a trade in the past month, and I've had 200 percenters. I've had 290 plus percenters. I've had an 88% profit. Most of my trades go over 50%, and I either close it early or I'll just let it expire worthless, because why wouldn't you if it's going to obviously expire worthless?
I'm gonna keep a close eye on your channel going forward. I was doing my own thing today with Snap, but it's good to see. I saw you sold the Meta spread today. You sold the 215 call, 220 calls expiring this week. You sold that for 28 cents. So your risk is about $5, and you're selling 28-cent spread. Right? Is that correct? Your risk
Right.
is
So
about
your risk technically is 470-ish, but I'd never let these plays go more than 100% loss, unless it's
Okay.
like an overnight thing that's just crazy that I can't control. But if for some reason it goes to minus 100%, it doubles in value. It goes to 56 cents or 54 cents, whatever it is. I'll sell it, or I'll buy it back for twice of what I sold it for. So I'll lose my credit, and so like if I was going to collect $100 in credit, I'll pay $100 instead. So I'll lose $100, but at least I'm not letting it go more than that. I'm a firm believer in let your winners outweigh your losses. So if I can win 9 and lose 1, I'm very happy with losing that 1.
Right. No, that's smart. I don't think we're going to be gapping up in Meta anyway, given the market looks pretty shitty today. Also, with all this recession bullshit, I don't think Meta wants to run that high. I'm looking at it right now on the charts, and it looks like Meta is really like it's kind of hitting resistance at 200, 207. It has gone to 27, which is kind of scary, but right now it looks like it wants to go down, is what the direction seems like.
Right. And I mean, even if it goes to 207, the thing is, like, I have an extra $8 on top of that as a buffer just in case.
Yeah, I'm looking at the trade. So I'm actually looking to replicate the trade. I can't sell spreads right now, but I'm looking at it. So he sold the 220, 217 strike.
No, if you're saying if you did,
I mean, I don't have the power to the authorization. I have a cash account. I don't have a margin account.
right?
But I'm saying you sold the 217.
I
you
sold the 215 and bought the 220.
Oh, you bought the 2. Okay, got it. I see.
So I sold a little bit closer.
I'm gonna get funded. I'm gonna get funded soon, like in the next day or two, and I'll have the funds so I can, have a margin account, because this day trading is very risky and stressful. Because I also have a full-time job, so I think the spread stuff is really good.
Yeah, I really enjoy it. And the other thing is, like, in a ranging market, I don't like trading buying options, because you're always going to lose money on your theta, and unless you predict perfectly whenever the market's going to break out or break down, you're always losing that money. So whenever you sell an option, you kind of hope the market just chops up and down, because you're just collecting that money.
Exactly. Yeah, I mean, looking at the chart, it looks like it tried to go to 27 and got slapped down. So I don't think it's going to go to 220 by Friday. And also, the beauty of Friday is that even if it does go to say 220 or 215, by Thursday, it's not going to be 215 on Friday. It's going to be 212, 213, 214 on Friday, because Friday is usually a very pessimistic day. They sell off. They don't
Right. Yep.
really
Friday sell-offs.
buy. Friday sell off. So I think that's smart. So how long have you been trading for? A couple of years?
I've been trading for about 6 years now. I traded on a custodial account before I was 18. I'm only 20 now, but
Okay.
I make more money on this than I do for my business and my job. But trading's up and down. You never know. So I like to have the fixed income from a regular career. But yeah,
I know exactly. I know exactly your story, because
mhm.
I used to be, before my downfall, I used to be a successful trader too, and I've made like 40, 50K just one day, selling, buying tons of puts, and but if you have a large enough account, if you do this right, you can definitely make a lot of money. I get you. The only thing is that when things go against you, then you're screwed. That's all. That's the only problem with the large position.
Right, and that's my whole thing. That's why I don't alert every single trade I take, because
Yeah.
to be honest with you, I have a huge equity portfolio, and I trade these options in my equity portfolio, and I might sell some covered calls that I'm just not going to alert, because most people don't own 100 shares of SPY or 100 shares of Mastercard or 100 shares of Nvidia, where I do, so I can sell naked calls, where most people just can't. So I'm not going to alert those plays, but as for my personal portfolio management, I sell options all the time. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I have 13 option trades open right now, ranging from expiring this Friday up to August 18th in my personal portfolio that are just hedges up against the market. So I try to hedge out my equity portfolio just so I can kind of match for some of that volatility. And that's just how I personally do it. There's a million ways to do it. That's the great thing about trading and investing, is you can figure out your own way. And that's what I think I've kind of done for myself.
That's smart. That's smart. As long as you have a big enough account, then yeah, it makes sense to do the spreads and everything. Because even if you get dinged, you can survive. But for somebody with a small account, say a $30,000 account, $25,000 account, they can only do like limited number of these trades.
Correct. And at that point, it's just like the extra money still helps, I mean, especially if you're not successful trading outrights.
Yeah, yeah. I think if somebody can manage to make even 5K a month on a 25K account selling spreads, I think that's pretty successful.
No, I mean, if you're on a 25K account and you can make 2K, I mean, that's almost 10% of your portfolio. That's incredible,
A month, you're saying, right?
Correct. Yeah.
Yeah, yeah.
My
Okay.
my goal with spreads is to make 20% of my account yearly at max. If I'm hedging out, I like to make 5% of my account, because again, 5% of, let's just say, 10 million is a lot more than 5% of $10. I think of options, I think of trading in a way percentages, right? If you're making 10% of $100 and that's all you have in your account, that's great. You increased your portfolio about 10%. If you're making 10% of 10 million and you made $1 million, that's great. That's still 10%. So if you can sit there and if you can compound your gains year after year, you'll be trading with a $100,000 portfolio before you know it. I'm not saying just anybody. It's just all about compounding your gains and being consistent.
Yeah, it's just trading is all about making the right decisions, the right entry points, and the right trades. And if you make the right decisions, you're good. And if you make the wrong decisions, you're broke. So that's what it really is.
And it's all about patience too. Like, you ask what will I be entering tomorrow? I might not enter anything. I'm going to wait for the right opportunity, because I size pretty heavily. Like, I have a lot of collateral into these positions. So I'd rather just wait for the perfect opportunity than just say, hey, here's a trade this so I can make one.
Yeah. I personally think Nvidia is done. Doesn't have any more upside. It's just the
Oh, yeah.
price to equity, the PE ratio is ridiculously high, and you can just see the Wall Street, whales they're not buying it. They're just dumping it slowly, and
Mhm.
you can see that in the price action. So
I'm actually
we missed
short
the
some. I'm actually short some Nvidia options right now that I entered on Friday. I'm up 20%.
yeah
I sold
yeah
the 300 call and bought the 310 call.
yeah
So the credit was $45 per credit for a $1,000 investment, and
yeah
Nvidia's trading at 265 now. The odds of it moving $35 in a week because it expires next Friday is so low to me. So that's why I'd enter that position.
Yeah.
But
I
no,
want
I
to
agree.
ask you, I've been following your algorithm. Your algorithm, is it something you design yourself, or is it like you use a code from the TradingView?
No, so it's actually, I'm glad, I'll kind of end on this, guys, because I know it's getting kind of late. The algorithm is called the Effortless Algo. You can pull it up on your, if you purchase it through my website. I'll throw, there's discount codes if you DM me or if you look in the description of the YouTube video. But basically,
Okay.
Effortless Algo, you can pull it up right here. It's on your chart just like this. I like to toggle off some things. It's very customizable. I like to turn off VWAP. I like to turn off the support and resistance, make it less busy. But this is what mine usually looks like. And it's around the 5 minute is what it's primarily traded on. SPY on the 3. So what the algo does is it's custom coded with take profit levels with stop loss levels. So for example, your stop loss would be right here where it says long, this little tick. Take profit right here. And there's videos on it on my website about it. So it's fairly accurate. I don't measure the accuracy of it exactly, but I'd venture to say that it's 70 to 80% accurate, which is incredible for an algorithm. I really want to get it automated. But yeah, it's custom coded.
Is it 70% accurate or 80%?
I would say 70 to 80. I don't, like I said, I don't actively track it like I do my own trades, you know, because it's impossible to track it on everything that I have it set up on. But I mean, that's why I offer a free trial.
But we get the free alerts. We get the free alerts in the Fatty's channel in the Effortless Algo alerts. We get
Sure.
alerts. So anytime your algo spits out a buy signal, sell signal, we get those alerts.
Right.
Yeah, I day traded some of the alerts. They were good. You know, the thing is that they're pretty accurate. Sometimes it said like spider's going to drop, and it dropped literally. And sometimes it tells you the take profit, which is awesome because it predicts the time to exit. And you know, that's pretty sophisticated. That it not only tells you to buy or sell, it also tells you when to get out or when to stop out, which is pretty sophisticated, I think.
Sure. Yeah. So a bunch of you guys that are in, I know if you guys are in the Discord, you guys have that algorithm, the chats for it, right? And guys that are on YouTube, some of your servers might have this feature as well, where you can see the algo signals. But a lot of you guys might not want to see that. You might want to see this on your chart, so which is what I have right here on the chart. And if you are interested in that, you can visit the link in the description or in my bio. I think it's in the description of the YouTube channel. Let me see. Yeah, effortlesstraders.com. Or you can visit the link in my bio, again, effortlesstraders.com. And you can actually add this to your TradingView chart. And that way you can have it on any security you want. Like you can go to, let's just say, MasterCard.
Does this work well with crypto? Does this work well with crypto or just stocks?
Let's check. Give me a crypto.
Can you do Ethereum?
Yeah, sure. This is Ethereum right here. This is the 5 minute chart.
Okay.
So, I mean, yeah, it works fairly well. I mean, it's designed to go off price action, you know, and it works on Forex, stock, crypto. It's designed for mostly stock, but it looks like it works pretty well on crypto as well. You know, you're going to have some fake outs, like these two longs were fake outs. The short was a fake out.
Yeah.
Then once volume picks up, it's fairly accurate. This hit profit, this hit.
Yeah.
So
crypto is a wild animal to begin with.
Yeah, crypto is just volatile, man. It's crazy.
Yeah, so I think stocks is probably better. So may I ask you this question? When you designed this algo, you use a lot of research and code, I guess, to build it, right?
Correct. Yep, it's all built in PineScript on TradingView.
Yeah. Do you know, like with ChatGPT now, you can link it and you can actually tell it to buy and sell for you. So you can actually buy and sell positions based on the algo. You don't even have to watch it do it. Have you tried that ever?
I haven't, just because I'm not a big fan of auto traders, and because this is based towards day traders, right? I told you I don't like to day trade. Even if it's automated, I probably still wouldn't like it. But this is meant to help people that want to day trade feel more confident in their trades. Whenever I used to day trade really actively, whenever I had the time to, I would use this only. I'd only use this algorithm to trade. But since I've switched my strategy, it's not quite as beneficial to me. But by all means, I still endorse the algorithm. I created it myself, so I love it.
Okay.
But like I said, there's a free trial if you guys want to visit the website. Feel free to shoot me a message about it. I'm really
How long
passionate
is the
about
free
it.
trial for?
What's that?
How long is the free trial for?
The free trial is for a week. You can try it for a whole week, risk
And
free.
then what's the cost of it afterwards?
After that, it's $30 a week or $100 a month.
Okay, $30 a week, so $100 a month. Okay.
Right?
And you
Or,
take PayPal, right?
what's that?
You take PayPal, right? PayPal.
I take Stripe. If you look at the website, you'll see all the details.
Got it. Perfect.
Yep.
Sounds great. And how did you merge with Fatty's group? I wasn't trading at the time, so I saw you recently joined.
So I'm a member of several Discords. I'm really active. It was called Safe Traders. I was really active in that Discord. It was one that I chatted in the most. And
Okay.
there's other Discords on this YouTube channel, so I'm not going to endorse any of them. But basically the merge was I just came over because I was an analyst from the other server.
Oh, got it. So you merged with Fatty's group. Okay, that's
Correct.
good. I think there's been a lot of beneficial. I appreciate you doing this workshop for us and sharing great ideas. I do realize it's late, so I just wanted to say thank you for sharing all the good stuff, and hope your trades stay blessed.
Yeah, thank you, man. I appreciate you engaging in conversation. I'm sure a lot of people learned a lot just by you asking questions and talking about it.
Yeah, I mean, I figured, it was a monologue, so I figured maybe I'll ask some questions. But anyway, it's getting late, but thank you, man. And I'll be looking out for your trade signals for day trade swings, see what happens.
For sure, man. You have a good night.
Thank you too. Bye.
But yeah, guys, I'm gonna pretty much wrap it up here. Like I said, feel free to check out if you're watching on YouTube, I'd really appreciate if you guys leave a like and subscribe. It really helps me reach more people and lets me help more people trade. Because that's what overall that's what I want to do. I want to educate others to learn how to trade and to learn how to be successful. That's why I host these workshops. That's why I try to do Q&As and live sessions every once in a while. It's because I want to help people, right? So I'd really appreciate if you liked this and subscribe to it. Also, if
I'm just subscribing. I just subscribed to your channel right now. I just literally subscribed to it.
Awesome, man. I appreciate it.
I'm gonna get a few of my friends who are also struggling. They need some guidance, and I'll tell them that your YouTube channel is free. This information you have on Fatty's channel is free too. So, if people join and they like it, they might even subscribe for your algo. But I think first they'll just try out your trade, see how things go.
Yeah, awesome. So, and like I said, the algorithm, it's a free trial if you guys want to go try it out. What you do is you add the weekly subscription to your cart and use the code TRIAL, and it'll bring your balance to 0 for the subscription. So anyways, guys, I hope you guys have an incredible night, and I hope to see you guys tomorrow making some great trades. DM me if you have any questions. Feel free to fill out the contact form on my website or anything.
Are you going to hold it daily?
What's that?
Are you going to hold it daily?
Hold it daily?
Yeah, are you going to do it daily, or you said see you guys tomorrow?
Oh, no, just be like, see you guys in chat. See you guys make trades.
Okay.
Yeah, man.
Just making sure. Yeah, I'm not going to miss things out.
All right, you guys have a great night.
You too. Thanks, man.
Thank you
Appreciate
too.
that.
Have a great
Yeah,
night.
man, for
Thanks
sure.
for your initiative. Thank you for the workshop.
Absolutely.